Good afternoon, everybody. I'm Mona with Rec Revolution, and we are here for the webinar, The Puzzle of Funds and Fund Administrators. With me, they are joining Anders, Willy, and Martin. And before we start with this webinar, I really would like to say that it's going to be an hour. There will be a recording, and we will send the recording to all the people that have registered. If you have some questions, you can put it in the Q&A. We also have some time left for questions afterwards, towards the end of the seminar. So that would be great if you can have some questions. Having said that, why did we choose this topic? Solving the KYC puzzle for fund and fund administrator. Whereas you would say that, at the end of the day, it is a topic that already has been discussed many, many times. Now, one of the reasons is that there is quite a bit of involvement in this area. And the other reason is, while this topic has already been discussed quite some time, there is still a lot of puzzling around to actually solve the evolving regulatory landscape, the evolving complexity in ownership, and of course, how you really need to manage your own risks. But before we diving into this whole discussion, I really would like to welcome my fellow panelists that are going to discuss this very important topic. And so I will give the word on Anders. Please say a few things about your own background and why you're so passionate about this topic.
Yeah, perfect. Thank you so much for the intro, Mona. Good morning and good afternoon for those in various time zones. So my name is Anders. I am one of the co-founders and the CEO of Avallone, and I have a long background in banking. So I worked more than 20 years in banking, predominantly corporate banking across large corporate institutional clients and funds. But the last 7 years of my banking career, I turned to what I usually refer to as the dark side. So I was heading up operational risk and compliance for Nordea for 3 years and heading up compliance for Danske Bank for 4 years. And in those roles, specifically the last one, I've had the pleasure of seeing a lot of money laundering, doing various incidents there. But I think more importantly, the pleasure of seeing the complexity of KYC, the frustration around KYC among both in the bank but also with the clients. So that's briefly me.
Great, thank you very much, Willy.
Hi everyone. Thanks so much for having me. Again, my name is Willy Chang. I'm actually the COO. As well as the head of the exchange business at Alta. We are based in Singapore, which is where I'm dialing in from today. And we are the leading marketplace for alternative assets in Southeast Asia. Alternative assets really to us means any investment product that you can't easily access through your normal broker or through your bank. So these could be equities of listed companies, fixed income, and then very relevant today, fund products as well. We do have some very interesting real world assets that we put onto the platform. So everything from real estate to luxury whiskeys and wines as well. Even for the equity, fixed income, and real world assets, a lot of times we actually do put these into fund wrappers. So very much the discussion today and the general fund product, very relevant to what we're doing. So thanks again for inviting me and look forward to the discussion.
Great, thank you. Martin.
Yeah, thank you, Mona. My name is Martin O'Regan. I am the co-founder of an independent directorship firm called Solace. We provide independent directors on funds and investment vehicles. We used to be very much a Cayman business. Now we're very much an Asian business. And, AML KYC is always front and center for us. And later on, we'll touch on a few subjects as that relates to the board members that are responsible for AML KYC. We talk about this on a daily basis, Mona. So, happy to be on this panel and look forward to discussing it later.
Great, thank you very much. Yeah, so like I already said, right, this topic has been discussed already quite a few times, and also by us. But why are we having this topic now? Well, but we did a little bit of research, and if you look at the global AML market, right, it is the spending on KYC and AML specialists is more than $60,000 billion US a year. So that is actually a huge amount, and it's growing. And then if you look at the amount of money that is laundered through financial institutions and whatnot, it's more than 800 billion. So it is definitely something that is still very, very relevant, and still something that we apparently have difficulties with solving, in principle globally. I mean, you could say, we are looking into digitalization from Europe and from Asia, but at the end of the day, because of the evolving landscape, and I think, Anders, I really would like you to start a little bit on setting the scene there, because of the evolving landscape within the regulatory space, within the risk management space, but also globally with geopolitics and whatnot. What do you see that that is happening, especially in the fund industry and beyond? But also, how is it evolving, and how is Avallone playing a role in it, and what do they think from a theme perspective, from a risk management, risk assessment, but also an overall tools perspective in solving this kind of riddle?
Yeah, perfect. Thank you, Mona. So yeah. Let me try and kick it off, and Willie and Marty just jump in at any time, right? But I think in order to kind of explain the themes we're seeing, maybe a few words on Avallone and our approach. So we are a software as a service platform that focus on KYC. And actually, KYC is, I think, is a little bit of a misunderstood, or maybe even the wrong way to name it, because know your customers really is not covering the problem anymore. It should be know your counterparty, right? Because the amount of due diligence that's being done today is much wider than just customers. I think the vast majority of people listening in actually more focus on know your investor, right? So Avallone is focusing on know your counterparty, so the broad terminology around due diligence. However, we don't focus so much on consumers. It is more what we would call high complexity KYC, which I also believe is most relevant for the funds. And with high complexity KYC, it is actually the exchange of data between enterprises. So you have a bank on one side and you have a corporate on the other side, and the bank is always requesting, right? You have a fund on one side, you have investors on the other side. The fund is requesting. But we see more and more that everyone is starting to request from each other. So if you are corporate, you are delivering KYC to the bank, but you're also collecting KYC from suppliers, you are collecting KYC from customers, from investors, and vice versa. So that's all about what we're trying to solve in terms of digitization. And I would say our approach is we are an opinionated company. So it's not a software tool where anyone just comes in and then say, yeah, I'm going to build my own flow, because our experience is that people are actually in doubt what to do. So very rarely people wake up in the morning and say, today I'm going to buy myself some software. Most often people wake up in the morning and say, today I'm going to solve a problem. And that problem is, by the way, not a problem that people usually love. It's KYC, right? So an opinion-made platform around how to actually collect and screen. And this means that we have three main customer segments. Corporates, obviously, so large multinational complex corporates that both need to share and collect KYC. We have funds, very apropos today, real estate, infrastructural, private equity, venture, any kind of funds, because they just have high complexity in the ownership structure. They have legal requirements on KYC and screening, etc., etc. And finally, maybe a little bit of surprise, it was actually to ourselves when we found out it was a hugely interesting area. It's NGOs. So NGOs, highly complex they fundraise billions of dollars, and then they distribute it to the most crazy regions of the world, right? Because when you have to help people in need, they are very often in conflict zones. So how can you actually help NGOs with distributing those funds, making sure that they use the right vendors to get the money out to help children and people in need, and at the same time secure that their banks are not panicking, because banks usually panic when you start to make payments to Myanmar or in Afghanistan and stuff like that, right? So I'll shut up about Avallone. That's off. So based on what I've told you, kind of the customer segments and our solution, what are the themes we're seeing? And I think there's like 3 to 4 themes, and then I'm sure Willie and Martin can chip in. But I think the big one is risk-based approach, and I think that's been the big learning from the banks. If we kind of imagine that the banks has been beaten up the most over the years by the regulators, and they've been maturing the most, because this is also where the very large money laundering scandals and incidents has happened, right? And what they learned the hard way is that you have to have risk-based approach, so that you make sure you spend your time right. And risk management is really about resource allocation. So you want to make sure you don't spend all your time on your low-risk customers or clients or investors, but that you really spend more or less all of your time on the high-risk ones. And then there's something in the middle. So that's one thing. The other thing is obviously digitization. I know I'm biased when I'm saying that because I'm selling digitization, but it's a massive theme, obviously. Generically, it's a massive theme these days, but especially within financial crime prevention. Because in order to apply risk-based approach, it's extremely important that you can automate the processes. And I think one of the things also driving digitization is the challenge in getting talent. So we are still, I think, trying to build up a pipeline of talent. And when I talk about talent, it's those that can actually look at a case, understand the risk, understand a fund structure, that can be highly complex. It can require you a paralegal or even legal education, right? So how do we create that funnel of talent? And because it's so hard to create, you need to digitize so that the talented people don't spend time on a little bit less valuable tasks, right? I mean, so the more you can automate alert handling, stuff like that, the better. The third theme we are seeing is user experience, and that sounds a little bit weird, but it's user experience for the one sharing KYC. I met a few, but through hundreds and hundreds of customer meetings, I've only met a handful of people that said, I love KYC. The rest, they just hate it, right? And that's even people working with it, right? So imagine you're sitting as an investor and you're receiving the 7th KYC request that month. So the frustration level is very high. I think people generally understand the importance of it. It's not like 10 years ago, people say, this is silly, money laundering, that's not me, it's a theoretical risk. Now people know, no, this is for real, and I play a role in being transparent. But how do we make that experience for the investor, the one sharing, better? I think is a critical theme to solve, which probably connects to digitization, but just in general, putting yourself in your investors or your customers or your suppliers' shoes, and how do you want to share? And then the last one, and then I really will shut up, is sanctions. So the sanctions space has just exploded in complexity over the years in general, but especially with the Russia-Ukraine war. And the reason I mention sanctions is not to go into necessarily a deep discussion on sanctions, just to say that complexity and that risk is starting to impact normal companies, normal funds, that before maybe perceived sanctions as we do it, and that's fine. But now you see more and more companies being under investigation or charged. I think in Germany alone, I think we're above 200 companies being investigated for sanctions breaches. And they don't do it on purpose, mind you. I would assume most of them, vast majority don't, obviously, right? They do it because their process and their rigor is simply not up to standard. And they do it, or they end up in the situation because they they just screen the company name, the entity name. But now everyone has to start to understand, hang on, this is the one I work with, this is my investor, this is my supplier, this is the company name, but I need to understand the ownership structure up. And then suddenly they are in the world of pain that funds have been in for many years and the banks have been in for many, many years. And this is just driving the pain point of the 3 other themes even more, I think.
Yeah.
Okay, I will stop my avalanche of words. Martin, Willie, any comments?
Yeah, look, I agree with all of that, Anders, and you mentioned a few themes which were kind of nice to have before, but now are becoming compulsory, right? So things around sanctions, and they can happen quickly, right? If OECD or someone or whoever, regime decides that this sanctions come into play, they come into play quickly. So if you don't have the right infrastructure, the right technology, the right resources, the right team, how can you implement it, monitor it, report on it, right? So, and then we're looking at a lot of, geopolitical situations. Let's say if something comes out of the Israel and Gaza situation, if it goes to that direction where Israel won't, stop what they're doing, what do they do next, right? So sanctions is usually a way to forcibly stop people to do things. So that could come in quite quickly. So again, you mentioned, Anders, technology, digitalization, all of that. You need to have the resources for that. So in our world, in the fund world, certainly as a director, I've got ultimate liability and responsibility for a fund as a board member, and I got to make sure, to the best of my ability, that the underlying parties to the fund manager, the fund administrator, and the parties within that fund are able to discharge their duties in a manner that we need from the fund's perspective. So ongoing monitoring, ongoing reporting. Do we have the right providers in the fund based on the strategy of the fund, based on the domicile of the investors? Can the custodians, the brokers, the fund admins, can they move quickly when these sanctions and things come into play? So yeah, it's very relevant, and a lot of people are looking at digitalization, but there's still a lot of old school out there, and there's who think they can do it quite manually. But what will happen is if you get any sort of a inspection we're moving to more penalties for providers now for not complying, right? So it's going to change, and we're going to see a lot more fines and penalties for non-compliance. So yeah, I agree with a lot of the themes you spoke about.
Yeah, maybe I'll just add another comment.
Yeah.
No, I think it's always important to keep in mind, and I think at a lot of places I've worked with, right, from the compliance point of view, always also making sure that you're partnering with the business and making sure that anything that you're doing, whether it's KYC or AML, right, is also commercially viable. And then just to the point of UX, I think we're seeing a lot of challenges there. So the way that we operate our business, the core business is really a B2B2C model. So we actually onboard licensed brokers onto our platform. But sometimes the licensed brokers, or actually always, they'll be doing KYC on the end clients that eventually come onto our platform. But there are many cases where we also, as the platform provider, are doing KYC on those same folks. And so, you can imagine if I'm coming on and I want to be dealing with Alta, it's really, could be quite painful if I have to go through this process with, my immediate broker, and then have to come back to Alta and answer a lot of the same questions. So we really want to make sure that that process is as streamlined as possible. Otherwise, right, people just go away and say, forget it, right? This is just ridiculous. And we're also seeing kind of, I would say, a wave of kind of, younger, more technologically sophisticated investors coming to the platform. And so even if the process is very streamlined, if it's like, okay, we're going to be sending you this PDF file and, please sign it in wet ink and scan it and give it back to us, right? That also can cause a lot of problems. So it's really important, and I guess, right? And the observation I want to make is that there's always that balance. So even if you get the KYC right and everything is good, right? If the user experience is not powerful enough, you might actually end up turning away, right, or discouraging people from signing up on your platform. And that balance is something I think that we're always, looking at it and trying to get right. So.
And it's interesting that you say that even from an investor perspective, you guys are now also doing quite some checks and balances on the KYC and client onboarding on your platform. And to your point, Martin, you said, and it was a quite interesting one to Anders, like, it's all good that you say, okay, we have these days more sophisticated tools and we need to digitize. But to be fair, in the fund industry, a lot of funds or fund administrators are still working old school. And I just wanted to talk a little bit about that, because in a way, I mean, this is, of course, about how can we improve the whole KYC and AML process, and because it is a puzzle that we really need to solve, and it hasn't been really cracked as to our satisfaction yet. So my question is a bit like, how is it then possible that we are not jumping into those tools, and why are we still, even if we do some kind of a risk-based approach, Martin, you said, there are still a lot of companies that actually want to just, do the work they have been doing all the time. What are the obstacles or the challenges that they don't want to look into more digitalization or usage of technology?
I think some people don't want to be disrupted. We talk about disruption a lot. It doesn't suit a lot of people. So, they feel that, rightly or wrongly, can charge more money for some basic stuff, right? Where they know technology could play a bigger part. In the fund administrator space, I'm talking about the non-retail. Retail is more investor driven, and in the alternative space, it's more portfolio driven. It's a smaller number of investors. But we take the non-retail space in the fund worlds globally. 70% of the fund administrators in the non-retail space use the same system. So that is also a metric of cost versus benefit, right? So if I'm a small to medium operator and I'm going to digitalize this and digitalize that, cost of implementing a system could, based on the size of the clients they have. So it could be a cost factor for a lot of these guys. And then if 70% of them use the same system, what kind of differentiators are you going to add? And then, digitalization is coming up more front and center as a differentiator in the product offering. So, but, we see quite a number of them using very old school practices because it still works. So I think if we move into, I mentioned it earlier, we're going to move into a world of fines and penalties. And that might force people away from the old school sort of, certified true copies of things. I'm still get surprised by, some auditor or lawyer signs a piece of paper, so therefore it's authenticated, right? I mean, still surprised that still works, but it's
rubber
still
stamp.
Yeah, so I think it'll be some, systematic change, government change, regulatory change, that the fines will become such that if you don't move, clients will move to someone that will have the better product, right? So it'll take some time, but I think that will be the shift. Is there's going to be regulatory penalties for not complying with this stuff. So I think that will be the shift.
Yeah, that's definitely something. Yeah, Anderson, please go ahead. You want to react upon this?
Yeah, no, but I think it's a super interesting question, and I'm not sure I have one answer to it. But I think so. To the question, why are people not moving fast enough on the digitization? I think very often it's like people are just being busy. You're so busy with your manual tasks that you don't have time for the project, right? Which I think is a total fair thing. But then I think also what I see very often is that when you then discuss digitization or a tool with people, they kind of want to go from 0 to 100 in one go. So it's like they have 1,000 requirements, and if they can't see 3 of them being fulfilled, they're like, no, but then we can't do it. Instead of just getting started on the journey, I think is a common thing, and also accepting that sometimes, most often, you actually have to change your process when you digitize. So you can't one-to-one replace your former process with a new digitized process, because typically the former process was not optimized, right? And this is the beauty of actually not building your own, of actually buying something that the industry widely has accepted. That is because then you are most likely deploying best practice, right? I totally agree on also what you're saying, Martin, on some of them also stuck in that yeah, okay, as an administrator, I can probably bill more hours by following the old process, but that's a very short-sighted strategy, right? Because the one that wins is the one that actually can be more efficient and drive more customers and you know. And my final comment also to the regulatory comment you came with, Martin. I think it's going to very, very quickly start to become a requirement. Regulators will come in and say, hey, I can see what you're doing manually, but I simply don't believe you can do that at volume. And as soon as you have more than 50 or 100 investors, I don't think you can do it manually. So it'll become a requirement. And it's gonna start with the sanction screening, obviously, because you can't real-time monitor that manually, right?
Yeah, correct. I mean, you know, in the early days of sanction testing, you know, as a board, we have board meetings either quarterly or semi-annually, and there's each party comes onto the board meeting, the manager, the auditor, the admins come on, they report to us on the activities of the fund over that period, right, quarter or whichever it is. And then in the early days of the sanction testing, we're saying, oh, we test once a month. And then it was like, no, too much pressure. Oh, we test once a week, test once a day. And then it's becoming like hourly is even late. Hourly testing is even late now. You need to have real time, you know, 24/7 testing, because so many changes so frequently. You know, we had one administrator saying they tested once a week. They were very proud. They were like, dude, you know, a week is a long time when you're supposed to be testing something. So the other issue is if you don't monitor those investors, then you have regulatory issues once you find them. So it's best to try and find them before they come into the fund. Once they're in, that's a separate issue. They may become on a sanction list over time, but you know, before you let them in, then you really didn't have to know if they're on a list or not, because you cannot redeem them. You cannot give them their money back, because then you're part of the sort of AML cycle of, you know, money laundering then, right? So you have to keep them in your fund. You have to park them to the side. You have to hold their assets back. You cannot give them any P&L in the fund. You have to report to regulator on who they are, what they are, you know, what their assets were and everything else. So there is a resource drain once they're in there, right? Yeah, I think you're right, Anders. It will come to a penalty environment where the regulators would say, you know, you have to do it. And if you're not real time or near real time, then yeah, it just won't cut the mustard, right?
But that is interesting that you say that, Martin, because to be fair, I mean, as you know as well, in especially in Singapore, a couple of months ago, we had actually a relatively big scandal around money laundering and you know, not having identified the right people, and of course there were banks involved. So how can we just then wait on, you know, when the fines will happen, whereas we do see that there are apparently quite a bit of flaws in the processes that we have now in place, right? And those processes have not secured that we do our KYC or identifying or due diligence process good enough. So maybe we can talk a little bit about, you know, how we can well, what kind of scandals are a little bit around the globe? Because of course, this is just an example for Singapore, but we can definitely say that is happening almost everywhere. I mean, you can just, you know, open a newspaper or look online and you hear about all kinds of scandals. And this is actually exactly the whole problem that we try to solve, right? I mean, even if we talk about it all the time, the scandals are there. I mean, the fines are already there. I mean, you know, the due diligence hasn't been done that well enough yet. So how can we try to then get that better, improve that? And of course, digitalization is a part of it, but maybe we can take it a little bit broader. And maybe Willy, you can provide a little bit of an insight there from your experience and your background.
Yeah, sure. Yeah, I think as you alluded to, right, digitalization, and there's more and more tools out there that are available. And so and they're getting easier and easier to use and easier to access, right? So what we found is that, if you start to employ more than one tool in your overall process, that can sometimes help to find and fill gaps, right? That if you're just relying on one tool to be able to do. But I think the other thing that's really key, right, is that digitalization, automation, all these things, are very exciting. The term that always gets, discussed is AI, and can AI help to do a lot of these KYC processes? I found that no matter what happens, right, you still need that kind of human judgment, right? And somebody needs to be looking at whatever the output is of the tool or tools or the AI they're using. Yeah, sometimes the AI even today is wrong. Maybe I'll be wrong, and it'll be a different story in 6 months or 3 years time, right? But while the process is still as it is today, just making sure that you have kind of a team, right, or compliance officers that you really trust and have some experience here, who are able to not only leverage, right, but able to interpret the results of those tools. Having said that, no matter how good your people are, no matter how good your tools are, there's still always a chance, right? It is a risk-based approach, right? That things slip through the cracks. And really our job is to try to bring that risk down to as little as possible, but unfortunately it'll never be zero. And I guess that's why none of us can really, go to sleep fully sound every night. But yes, hopefully we get that risk to be something controlled.
Yeah. I concur with Willy. You can never get it 100% foolproof, right? I mean, with this latest AML scandal in Singapore, I'm sure there's another good Netflix movie going to come out of that one, right? Because, I was watching...
It'll take a while.
Yeah, well, I've watched the Madoff one on Netflix. I watched, a few other ones. So there's always a temptation when there's money, right? So there's always a temptation for crime, financial crime, fraud, collusion. There'll always be some element, right? And with the case in Singapore, I guess with the advent of AI and technology, and deep fake now is the new thing that people are talking about, is, people criminals will always find an avenue to manipulate something, right? And they've got so sophisticated now, they can manipulate the financial services market. So they had created, a bunch of fake companies with fake invoices, with fake transactions, and they had used, the financial system to maneuver and massage what they were doing. It was very, professional. So people say, oh, why did it go on so long? So again, if you watch Netflix movies and you watch mafia movies or drug dealer movies, you got to cut it at source, or you monitor it over a period of time to try and catch the big fish, right? So that's why it took so long, is they knew it was happening, but they were watching it. And then understand it and try and deal with it. So there'll always be issues. It's how you deal with them and try and put measures in place to mitigate it. So that's what we're at next. Now, company's office in Singapore are going to make some changes this year. They were using a lot of nominee shareholders, a lot of nominee directors and things like that. So they were hiding under a veil. And what's going to happen is, globally, they're looking at how are these people hiding under corporate veils? So beneficial owner regimes are going to come into play quite strongly, right? So Cayman, Japan, Singapore, a lot of these places are looking at who's behind these companies, who owns these companies. And this will become important from your AML KYC checks, is you really have to drill down into who owns it. Then ACRA, which is the company's office, are going to limit the number of nominees and nominee shareholders. And the MES is going to start looking at regulating some of these people as well, right? So be it service providers or directors or whatever. So you can never get 100%, but with the government authorities stepping in, then that will help with these situations.
Yeah, and I find it always so amazing that is always, in a way, a push necessary from either a government body or a regulator or an auditor in a certain way to get those things going. On the other hand, the other point I think is also super important is that we talk about, how we can actually use tools to or digitize to actually, prevent money laundering from happening, prevent fraud, etc. But we sometimes also forget that the bad guys are looking into the same tools to use them actually to do the bad things, right? So I mean, we're on two sides doing in a way the same thing, except for the one is the good thing and the other thing is the bad thing. I see we have a question, so I just want to address that first before we take it further. Iftikhar Rasul is asking, sorry if I don't pronounce the name right, is asking, considering the impact, volume, and enormous financial gain in trade-based money laundering, are we contemplating a significant increase in trade-based money laundering going forward? If yes, how best can we combat it, as it is an important global connectivity medium? Who can I address this to?
But maybe I can have a first. Yeah, I can have a first go. So I would say yes. I would say yes. Obviously, not obviously. I would expect a massive increase in this, right? And I think, to your point, Mona, the incidents we've seen in the past, that won't be the same methodology that the criminals are using today. So they are obviously shifting, and they are shifting from sometimes more liquid assets to less liquid assets, back to more liquid assets, and the whole digitization is also helping them, as it is helping us fighting it, right? So I believe that there's only one way, and that is to significantly enhance our rigor in our processes. And I think if you take the best of breeds of tier one banks and the rigor they are running at, I think that level of rigor needs to kind of drizzle down to the high risk industries, funds being one of them, obviously, right? So when you have a high risk, there's only one way, that is to increase the control level in a smart way, obviously. So it's not just necessarily throwing thousands of people at it, but it is throwing competence at it, and obviously resources in the end. I think there's only one way.
Cool.
Yeah, I think as well, it depends on what the asset is that's being traded, right? If you're trading equities on an exchange-driven product, then it's a little bit harder to manipulate that, unless people can manipulate the stock price on an exchange, which is getting harder and harder to do. So I think if it's exchange traded, it's getting harder and harder. But in the private equity space, the digital asset space, that is where, more scrutiny needs to be had, right? So I do think it depends on what you're actually trading when actually moving. And look, with the AML case in Singapore, that a lot of that was what was going on, right? They were falsifying, manipulating price, quantity, things like that, right? So it depends on the strategy and what you're moving. But yeah, it does happen, right?
Yeah, but I think, yeah, sorry, Willie, please.
Oh, no. Oh, okay, yeah. So actually, we run a licensed exchange here in Singapore. And again, we do have a lot of alternative assets that are trading. And again, right, it's all about reducing the risk, right? You can't completely eliminate it. But the fact that we are an exchange, we do try to set up the structure, right? And the general processes and the rules of dealing on the exchange to start with, right? To really reduce some of that risk. So what does that mean? That means that all of the clients and investors who are trading on our platform have gone through some sort of KYC process, as I was alluding to earlier. That's always done by the brokers that these clients have signed up with, and oftentimes it's also done by ourselves. In addition to that, all of the products that we do put on the platform are reviewed. There's stringent documentation requirements. We do have a listing committee as well. And then all the transactions on the exchange, right? We have an order book, it's all visible, right? But having said that, there's still always room, right? So we do monitor any suspicious patterns, anything that's particularly high dollar value, definitely catches our attention as well. But yeah, we're very, very much fully aware of this kind of risk, and hopefully, right, the processes and procedures that we have in place are good, and there's something that we're always, looking to improve as well. So yes, it's something that we think about quite a bit, but hopefully we do have a pretty good kind of structure and guidelines in place to reduce that risk.
Yeah.
Yeah, go ahead, Andrew.
No, just to your point, Willie, and I think that's often also what you see, that it is several compliant breaches in one. So you would have market manipulation as well as money laundering. So you use the market manipulation to actually achieve the money laundering because you're trying to manipulate the price between two known parties, right? So, and I fully agree, if you can control who you let into the market, you win. And one way of controlling that is to secure transparency. So if you heighten transparency in society, it becomes more and more difficult to hide, because then you have to actively conceal, you have to actually fake your identity as a corporate or a person, right? And I think coming back to your initial question, Mona, so the learnings from some of the former scandals, right? I think having had the pleasure of being in the middle of the Estonian money laundering scandal back in 2017 with that role, and it had been running from 2008 until 15, right? So quite many years. I think the main learnings there was everyone would say culture, right? But I actually don't think that was the main learning. It's very seldom in a bank that you have a culture where it's like, yeah, we wanna roll money laundering. It's great, we're earning money on it, right? So I think a more important one is actually competence. So very often people are not competent enough, simply, and too naive, and don't know how the system is actually misused, right? And thereby, if you don't have competence and you don't have culture, you don't have the right resources to actually mitigate it, right? And then I think a third one was IT integration, which is, it's digitization, but it's more old school. It's like if you don't have your bank or your fund on one platform, if you have dispersed IT system, it's a problem. And then the final one, which is really nasty, and that's internal collusion. So in the Estonian scandal, we saw internal collusion from some of the employees. So this means that you actually have criminals that has actually bribed their way into the organization, right? And then you are utterly in a pain point, right? Because who can you trust, and what is the information flow, right? And I think that just would bring back to my last point, that we often forget also when we have these scandals, because very quickly people start to point fingers at each other and like, but the banks are not good enough, or the funds are not good enough, or the regulator's not good enough. But the only ones sitting and laughing are the criminals, right? They're just sitting laughing afterwards, saying, yeah, look what we've done over the last 7 years. It was amazing. We laundered this many billions, and they're onto the next scheme, right? Unless we are good enough to get them arrested, right? So I think there's a lot of learnings, but we tend to forget. So it's kind of the same learnings over and over again over 10, 15 years, but we tend to walk around and think it's not going to happen to us. And then it happens. Yeah.
Yeah, and I find this very interesting that you say this, because in my banking career quite a few years ago, we had actually the same topics, right? It was all about how can you actually try to prevent money laundering from happening as an employee. And to be fair, you need to have a certain kind of learning, a skill set, and education, I would almost say, within the department, that you can actually competently try to get the spikes and know exactly where it goes wrong or right, etc., etc. And 9 of the 10 times when you're working in huge financial institutions, and I'm not saying it is everywhere the same, but generally speaking, a lot of times it is more seen as like an only repetitive work. And we do know that a lot of it is repetitive work, collecting the documentation and looking into it, and from a lot of different sources. But on the other hand, like we're saying, there are also a lot of complex ownership structures where you actually really have to think through and have to go through all those hoops to actually find the beneficial owner, etc. And that makes it actually that you have to have people that really understand, you know, what where the funds come from, what the underlying beneficial ownership is, etc. And I think that is something that we tend to forget when we read about all those scandals, that there is much more to it from an educational perspective still within the risk management compliance area. And it is a repetitive kind of topic that comes back every time when we discuss it. Even now with technology, there's another skill set that is actually necessary in those kind of departments, right? It is not only like a kind of a legal kind of documentation reader. It is much more also that you know what people actually can do with technology, what kind of technology is actually applied, and how it works, and how it can be secured or not. And then we come, of course, also into the whole idea of cybersecurity. So definitely that is something that that I think we tend to forget once in a while. But I would like to discuss a little bit more about, because we discussed quite a bit about the scandals, we discussed quite a bit about the challenges that we have, and how we can, you know, a little bit how we can overcome them. But we actually didn't really discuss the whole process. I mean, if we would go now and work with a fund or an fund administration person, as for instance, Anders, as you guys, as Avallone, what would you, what would be the best practices? What would be the, you know, the minimum kind of requirements that they need to have in place to actually really, you know, be able to secure the fact that their bad actors are not going to be on their platform, that there won't be money laundering, that there won't be fraud, that the KYC process that has been done in the right way, and even if it's not 100%, but what would you suggest to them?
So if I should start out, it wouldn't start with digitization, maybe surprisingly. It's old school risk assessment. Start with understanding your fund and understanding the inherent risk in it. And that's about, okay, what are the products I have? You know, what I'm investing in? What are the investors that go into the fund? What are the geographical regions they're in? So just identifying the risks. Because only when you understand your risk are you able to design a control environment that's suitable. Because otherwise you risk doing too much or too little. Of course, there's a regulatory standard that's set. That's a minimum, but you have to consider that that's the minimum I have to do, because this is not about comply. Yes, you have to comply with the law, but that's not in itself a purpose. The purpose is to fight financial crime and protect your fund against being misused. So I think it really starts with the core of financial crime prevention expertise. And if you don't have it inside your team, go buy it. I mean, go find someone that knows. And once you are there, then you can start to design your control environment and say, okay, yes, obviously we need to KYC the investors coming in, we need to monitor, we need to sanction screen, but then it's much easier to design that process because you understand your risk. Yeah, maybe that sounds a little bit too theoretical, but it's actually not, and it's not a 100-page report, a risk assessment. It can be a 3-pager. You know, it's just putting down your thoughts and your knowledge around your fund, and then get started from there.
Martin, do you have anything to add to that?
Yeah, I agree. Yeah, you got to know your space. You know, if you don't know your space, you're in trouble. So what is your space? Where are you based as a provider, and where are your clients, and what markets are they trading in, and what's the domicile of their fund? And so, yeah, so understanding your space, as Andrew said, is very important, because I think the vast majority of funds in the alternative space use Cayman, right? So then Cayman brought in some new rules last year, and as a director, I have to make sure that we're supposed to comply with them, right? So, so Cayman just got off the AML grey list, so that means they'll have to upgrade their monitoring and surveillance of the market, those that use Cayman as a domicile. In Singapore, it's a lot about VCC, and the board is actually responsible for AML KYC under the VCC. People don't understand that. They think it's the manager or the admin. It's not, it's the board. So understanding your space, how you play in that space as a service provider is kind of half the battle these days. And then once you said having your SOPs in place and your policies and your infrastructure in place, that is really half the battle. Then you can talk about digitalization and making that more efficient once you understand your space.
Maybe just one last comment here is that I think best practice is also just continuous improvement. And what I mean by that is that you can have the greatest team and processes and everything in place, but it can never be static because the things, right? The news is always changing, sanctions are changing, the regulations are changing. Unless you're always looking at your procedures, unless you're always looking at what databases you're using, you can actually get stuck, even though 3 months ago, 6 months ago, I was a leader in the space. So I think always having that kind of mindset is really quite critical as well.
Yeah, I think due diligence is important. It always was, but even more so. So when you are getting service providers, I think they're starting to do this moment where they're actually spending more time doing due diligence on the providers, and people just blindly went into contracts. I wouldn't say blindly, but they didn't deep dive enough into their service provider and their contracts and the actual. People are actually to look at that a bit more. So we're starting to see that now, which is good, right? But then that takes more time to onboard someone now as a provider. But I think that's an important change that has happened. People are starting to understand their service provider. I think Anders said it earlier about know your counterparty. Understanding that process is quite important. The other thing as well, as a board member, we do on-site inspections, Mona. And when we actually do, so what they say on paper may not, when we talk, as Willie said, you can have all the policies and procedures in the world, but unless you follow them. So when we do on-site inspections, what people tell us, and then we get all their contracts and their agreements and their SLAs and everything, a lot of time the service provider is not doing what they say in their policy. So Willie's correct. You can have all the policies in the world, but if you're not following them, and as a board, if there's an error, if you go to court, the judge will only look at what you put in front of them. So they're looking to sue you for breach of contract. So as Willie said, you can have great policies, but if you don't follow them, then that's where you become unstuck, right?
But I think that also adds to what Anders said about, it is not about only following the policies and procedures and the regulation, right? Or the law. It is really about understanding where your risks are within your company and then trying to adhere to that, right? And whether that's in an old school base or whether that's also using technology, that depends on, of course, your strategy for risk management, but it's not either or. That is what I understand, right? Yeah. The other thing is, you mentioned the interesting, just quickly, because I know we are running out of time, but one more thing that I actually wanted to discuss a little bit, which is always a big theme also when we are talking about RegTech solutions versus implementation. And one of the things is, although we say, digitalization is super important and the amount of data that comes our way is, of course, almost undoable anymore in a manual way. So let's look at tools. But then you might have found a tool like Avallone, and then you want to implement it. Then 9 of the 10 times you have quite some challenges there as well. And I would like to have a quick reaction from all 3 of you guys. What's your interaction with that? What's your experience with that? Because we have different angles in there, so that would be great to hear. And Anders, I start with you.
Yeah, I think the challenge is more mental than it's actually real. So I think, and very often what scares people the most is data migration. Getting the data you already have up and running, and then of course also in the time period where you are onboarding, are you then still compliant? I mean, do you have breakage of process in the time period? When it comes down to it, it's a minor thing, because of course you can run parallel processes while you onboard. And today, I think the technology is evolving so fast. So like 3 years ago or 4 years ago, when you talked language barriers, for example, like, okay, we want to have questionnaires out in multiple languages to our investors or our suppliers. Today, that's no problem. I mean, it's so easy to automate, right? Because the technology has become very, very good in translation, right? The same goes with data discovery, data cleansing, and thereby the migration with the old data to the new data, right? So for me, it's good project management and an experienced vendor, regardless of who it is, will overcome those challenges, I think.
Great. Willy?
No, I think
Your experience.
Anytime you're working with tools and third-party vendors, it's really important. And to the earlier point about know your counterparty. This is a counterparty as well, right? It's somebody who's going to be supporting our KYC process. And for us, one of the most important things is really around reputational risk and a good track record, right? So wanting to make sure that whoever it is that we're working with, right, has plenty of experience in that area. I mean, the best is that, if it's any of our partners or clients that have worked with this vendor before, we can get some good kind of testimonials. And the other thing too is, and this is less on the kind of compliance part, but I found that responsiveness is also quite important, right? Because inevitably you're using this tool and then something comes up, we have a very unique fund or a unique case, right, that you need to check, and it doesn't really kind of fit through the normal process of that vendor, right? And being able to reach out to somebody quickly and they're able to answer your questions, I think is something also that we look for and try to screen when we're selecting who we partner with and what tools we use.
Yeah,
Nice.
I think we're sort of creatures. We're sort of creatures of habit, and we'd like to be comfortable with something, right? So we kind of tend to stick to what we know. But I think if COVID was good for anything, it was good to show people that you can adapt to change, right? And technology can help with that, and you can work from home, and you don't have to be in the office to do everything. So I think one of the benefits of COVID was it fast-tracked a bit of a mental shift away from manual stuff to sort of technology and outsourcing, and not everybody has to be in the same place at the same time. So I think that was a very positive mental shift when it came to things. But we are creatures of habit. But again, unless it's a bit, if it's an off-the-shelf piece of software, then as Willie said, you got to look at who your clients are and references, and as I said earlier, due diligence, spend more time on that. But I think that we're just going to see more and more and more now. The cost of doing business has become higher. Your revenues have not gone up. In fact, they're probably coming down. Cost of doing business has increased. You can't throw too many people at it these days. So what tools can you add to your chest of services, and how can you supplement, right, some of the processes by getting software and automation and digitalization. So so it's getting better, but I mean it's not there yet, but it's definitely getting better.
Great. Thank you, guys. I think we're running out of time. I really would like to thank you all. And we could have discussed this, of course, for another hour, but we don't have that, unfortunately. I think we really came to the conclusion that we are getting there, that we actually try to look into, digitalization. We try to look into how we can manage our risks better. Of course, it is not 100% fully there yet. But I think webinars like this and companies like yours will help decide for the fund and fund industries. Thank you very much. Have a great day. Also, the ones that came along and wanted to listen in, and hope to see you all soon, very, very soon. Okay, goodbye. Bye-bye.
Thank you so much, guys.
Thanks, everyone.
It was a pleasure. Thank you.
Thank you.